But if I look in chat rooms, I look in the forums, no one's talking about you. That you're not a talked about story, despite being, according to you, the best of your peers. Look at gold; it's done exceptionally well. Producing companies are doing exceptionally well. The returns are much higher than you're saying. So I get that you're against your peers, it's good, but against the market, and just if we stick with mining alone, let alone the investment market, you guys are not doing that well at the moment. So how are you, IsoEnergy, going to put yourself in a position, the best position for uranium compared to your peers, to take advantage of that? The more you know, the more attractive you are. Is it as simple as that? Hello and welcome to Crux Investor. Last year was pretty much a lame duck for uranium equities, but we caught up today with Craig Parry. He's the CEO of IsoEnergy. They're based in the Athabasca basin. We discussed their recent fundraise and also their imminent drill program, plus his thoughts on 2020 and what that's going to deliver for uranium investors. We also discussed a number of other topics. Look in the description below, click on any of those topics, and that'll take you to that part of the video. Also, if I could ask that you click the subscription button in the corner of the screen. And of course, if you want to see more videos like this, click the notification bell. Let's hear what Craig had to say. Hi, Craig, how are you?
Good, Matt. How are you going?
Happy New Year to you.
Happy New Year. Good to be back.
Yeah, I bet. So I bumped into you at Mines and Money in London. You were running around there telling your story, and then I think you disappeared to Australia with your family.
Yeah, exactly. It was a busy finish to the year, of course, because we were raising money. Yeah. We got that done, and that allowed me to have a couple of weeks with the family at least, which was great.
Okay. So let's talk about it. You raised some money. How much did you raise?
So we raised 6.7 million, of which 3.5 was flow through dollars. So that'll support our exploration program going through the next 6 months. And then the remainder of that 3.2 million was hard dollars, of course, and the bulk of that, all but 2.9 million of that came from NexGen.
Right.
So again, our major shareholder there, NexGen, is showing tremendous support for the company and what we're doing. And I think our chairman, Lee Courier, who's CEO of NexGen, of course, he's very pleased with this discovery that we've got at Hurricane. So we continue to enjoy that great support from
NexGen. Okay, so if you don't mind, because I think when we talked last, towards the end of last year, when we did an interview, we talked about that you were going to need to raise capital. You've gone and done that. That's partially to keep the lights on, but you've got a big drill program lined up. But can I just break down the money, because not all juniors have found it easy to go and raise money, and certainly not in the uranium space. So can you break down that money again a little bit further for us? So NexGen have put up some. Where's the rest of it from?
Yeah, so look, that's right. That hard dollars, 2.9 million from NexGen. I wrote a check myself. Steve Blower, our Vice President of Exploration, wrote a check on that hard dollar front as well. Pleasantly surprised to actually have one of our London-based investors call us and want to get a part of that deal as well. Mm-hmm. So that was nice. So we had CQS come in for a little bit more of that hard dollar financing. And then, of course, the great thing about the Canadian market is this access to flow-through capital that we have here for exploration, drilling. And so we had a number of those major flow-through funds like Sprott, Jason Mayer's fund there. We had Dennis De Silva at Middlefield write a significant check for that. So that went very well. Interestingly enough, we opened the financing to look to raise $3 million. Within about half an hour, we had interest for $3.5 million. So we decided to close it there. We didn't really need any further funds for the next 6 months and for that drill program we've got. So we stopped it there. But by the end of the day, we'd had interest for $5 million. So, it's good to see that the flow through fund money is still out there and interested in good uranium projects. So that was pleasant for us.
Yeah. So we've spoken to a few companies that have been the beneficiary of a bit of flow through capital. So for people who don't understand what that is, tell us a bit more about that.
Yeah. So of course those guys, they raise money that must go to exploration, and that money flows through so that investors get the discount or get to use those losses to offset their income. So it's a tax break, really, and a tax break that encourages exploration. Now, the two great things about that for us are that the Canadian market has that funding available all the time. It typically comes available to a large extent towards the end of the year. So, that sets you up well for the next year and for your sort of winter drill program. So that's good. And then the other thing is that comes in at a premium as well to the share price. So I think, when we announced the financing, we were trading at around 40 cents a share. We did that flow through component of the placement at 45 cents a share. So, it's relatively less dilutive. But, one of the challenges with flow through funding is that there's a 4-month hold on that stock, and you can see a bit of selling at that 4-month point sometimes. However, we've been in the fortunate position that we've been very active putting out good drill results, and so we haven't seen too much of that sort of the downward pressure on our share price off the back of selling the flow through stock so far. So, it's very, very useful for us because we are active on the exploration front, and it provides you a ready source of capital.
It's an interesting time of year because flow through. There's a lot of money available. It's a tax break, like you said, you mentioned that it's built to offer a tax break to investors. But do you find it easier to pitch at that time of year because they've got to deploy a lot of capital quickly, or are you still having to stand out amongst a lot of juniors, pretty much saying the same thing? How did you get your money? Was it easy?
Yeah, look, we've talked about this before. I think it's never easy, although it's relatively easier if you've got a team with a track record, you've got that support from our big shareholder at NexGen, and you're active and you've got a discovery on your hands. So people want to back that story because, of course, those flow through investors, they still get a kick if your share price rises. So their preference is always to back good stories. So it's relatively easier for us, but raising money is never easy. So it's all that preparatory work we do throughout the year. Steve Blower, our VP of Exploration, our investor relations guys do it, and I do a hell of a lot of work. We're always on the road when we're not, when we're not at the coalface, as it were. Yeah. Doing our day jobs. Our day jobs is to be out there talking the story and letting everyone know. So we do all that preparatory work.
You've raised the money. You knew who to go and speak to. And you got it fairly quickly. That's what I'm hearing. So during this interview, I don't necessarily want to talk about the macro component too much. I want to get into the nitty gritty of why IsoEnergy is going to stand out. So you've got some money, which is more than a lot of uranium juniors at the moment. That gives you some options, and obviously, NexGen continue to follow the money. Great news. What are you going to do with this money? Is it just going to be frittered away, drilling holes that no one cares about, or is it going to actually be meaningful?
Well, it certainly has to go into drilling holes. It's something we pride ourselves on. Putting as much of our investor dollars as possible into drill holes as opposed to anything else that we might do. And so the bulk of that funding will go into this drill program. We're actually we're in the process. We mobilised our second drill rig out to that Hurricane or the Rock East property and Hurricane site back in December. So you'll see a bit of news flow from us over the next couple of weeks as we announce that we're kicking off that drill program. And that's an expanded drill program. So the last two campaigns we had one rig on the ground. Typically drilling 6,000-7,000 metre programs. This time round, we're going to have 2 rigs on the ground going around the clock. That'll be a sort of 5 or 6 week long program. We're drilling 20 holes and about 8,500-9,000 metres of drilling over the next couple of months. So a huge amount of, first thing about that is, I suppose, if you look in the uranium space, I think that puts us at about number 4 in terms of exploration spend globally, which is, pretty serious going.
Well, it is, but the competition's not too tough either, right? No one's got money to do too much at the moment. So I don't know if I put too much store by that right now, but can you explain to me and explain to investors? So you've said, I've got this money, and the best way to get a return, either dollar for dollar or get a 3 times return, 4 times return on that money is to drill holes, only drill holes. Is that the plan? Is it just as simple as that?
Well, look, of course, we've got a high-grade discovery there in the Athabasca basin. We're drilling that out and doing essentially resource delineation drilling. So that will give us a return, absolutely. Over the last 12 months of the Canadian uranium companies, we've been the best performer because we have that high-grade discovery, and we've been putting out good drill results.
What do you mean you're the best performer? What does that mean?
Look, I think that for the year we were up about 4 or 5%, whereas the next best uranium explorer was down about 15%. The average was down about 50 to 60% for the year. So whilst our share price hasn't risen dramatically, we've outperformed most of our comps very convincingly by doing that work and doing those drilling that we've been.
But here's the thing: investors have got choices. They not just mining, by the way. Right, they can invest in technology, healthcare, lots of different things they can invest in. But if they're looking at mining, they can look at gold. It's done exceptionally well. Producing companies are doing exceptionally well. The returns are much higher than you're saying. So I get that you're against your peers, it's good, but against the market, and just if we stick with mining alone, let alone the investment market, you guys are not doing that well at the moment. So what I'm trying to get at is, what are you setting yourselves up for? I think the macro story is well understood. I think this year will be very interesting in terms of what the utilities are going to have to make some calls. I do think that, but I don't necessarily want to get into half-hour dialogue with you about it, because I think it's a well-trodden path. But how are you, IsoEnergy, going to put yourself in a position, the best position for uranium compared to your peers, to take advantage of that? And does it come back to that drilling? The more you know, the more attractive you are. Is it as simple as that?
Yeah, certainly. Look, we think, the key to our pitch is that we are the only uranium company with a new high-grade discovery, and all the better that it's in the Athabasca basin. So advancing that project sensibly, logically, we're not, we don't have 10 drill rigs on the ground. We could certainly do that, but we don't see that as a judicious use of our shareholders' funds. Taking a slow and steady approach as we lead into a sort of more bullish market, we think that's the right approach. Having that discovery will certainly get valued more readily and more highly than other juniors without sort of comparable high-grade discoveries. But having that project advance to a point where we can take advantage of the next cycle is important.
Well, can I ask a question? You said something quite interesting there to me. You said, you could have 10 drill rigs on the ground there, but it's not the best, judicious use of money, your investors' money. What is that decision making look like? Say we're going to use two drills because they're going to give us enough data to tell us enough about what we've got under the ground to make this attractive story, versus you can get 5 times more data with 10 drill rigs, but that is, the return isn't as good there. So I mean, what is that debate that you're having internally? How do you make those decisions?
Yeah, internally, absolutely. No, and that is, that's the art of exploration, I think. And something that we'd like to think that we're fairly adept at, and our approach there, I suppose, is you get to this point, it starts to become about ore body knowledge and understanding that ore body, and so we haven't defined the boundaries, the limits of that ore body. We did a big step out drill line of holes there on that last program that we did. That's now given us a sort of 250 metre gap that we need to infill drill on. You need to weigh up the target, what you'd like to achieve, how quickly you'd like to advance towards a resource, versus how much money you can raise realistically as well. And then factoring in how that dilutes your shareholders also. And I suppose if we were to go out and drill, you take a stepwise approach to that particular problem. I don't think there's any sort of right or wrong answer. For us to raise $3.5 million of flow through at 45 cents a share, fairly dilutive. And if we see, the uranium market take off in the next 6 months, then you could logically expect our share price to be much higher. So rather than raise $10 million at 45 cents of flow through money now and put 3 or 4 rigs out there, the idea is let's get 6 months worth of exploration capital there, put 2 rigs on the ground, see where we stand come May, June, and then work out what we do from there and ramp up. But so there's a sort of a bit of a multi-factor challenge and problem. No right or wrong.
The eternal debate. Okay, from management teams. So if I look at share price this year, you pretty much ended up, you're a little bit down on where you started the year, 12 months ago, roughly. So it's, fine. As you say, compared to your peers, you're probably happy with that, right? But if I look in chat rooms, I look in the forums, I go into Twitter, social media, no one's talking about you. That you're not a talking about story, despite being, according to you, the best of your peers. You think that's a uranium thing, or is it the fact that you guys haven't really got out there and told your story to retail?
Yeah, good question. Look, no, I think we're probably on par with a lot of our sort of peers. The companies that are getting talked about, Cameco, NexGen, to a lesser extent, probably Denison. Those bigger companies, Fission, although, they seem to generate a lot of interest in those chat rooms and things. We don't, to be frank, we don't really put too much emphasis on that. If you look at our share...
Why don't you care what they think?
No, we do care what they think, and I think overwhelmingly the sort of feedback we get from those from retail investors has been pretty positive. And we are out there on the road all the time talking to people.
But you're talking to institutions, though, aren't you? You're talking to institutions. That's different from retail.
We spend a fair bit of time at conferences as well. We were in Mines and Money with you there a month ago.
But it's not a retail. Those aren't retail environments. The number of retail investors there.
But the conferences. Yeah, but the conferences we attend here, Matt, are very much retail, particularly that Metal Investor Forum and a couple of those other forums. We'll be at, and we, I'm sure we'll see some of your viewers next week and the week after at Roundup and the VRIC here in Vancouver. A lot of those investors are retail. But oddly enough, if you look at our share register, which is on our website there, www.isoenergy.ca, you'll see that oddly enough our register reads as a bit of a sort of an institutional investor register. Of course, NexGen sits there with about 52%. We've got Cameco there with 5%, Orano's there with a few percent, 3% as well. So the register on that side is a who's who of the uranium space. And then probably we think about 25% of our stocks invested in institutional investor hands. So it's a sort of, for a junior company, it's a much more advanced share register than you otherwise might have. And I think that in part means that we outperform. We don't see sort of retail investors dumping too much stock into good news. I noticed, our share price today is up 5 cents in early trading. What we do see is that when we announce that we're about to commence drilling, our share price performs pretty well. So I think investors have got that to look forward to over the next couple of weeks. We'll be aiming to commence drilling around the sort of 25th of January or thereabouts. So a little bit of good news. And then, of course, the news flow kicks off from there. So we'll be drilling in and around those high-grade intercepts that we've had. We've only closed off one section on that Hurricane discovery. So, you can never guarantee that you're going to get good drill results, although Steve Blower, our VP of Exploration, has guaranteed me we'll get some. So we'll see how that goes. But, we'll certainly be drilling next to some very, very nice intercepts there that haven't been closed off. So, I'd expect that we'll be putting out, good strong news flow over the next couple of months.
Okay, and then so money takes you through to mid-year. You're gonna make some decisions then as to whether you go out and raise some more money. You'll take a look and evaluate the market, I'm guessing. Are you getting any signals or signs from the market as to what the hell's going on over there? Because we're not.
No, look, and to be honest, I only just got back to Vancouver on Monday, and sort of just got my feet back under the desk. So I'm sort of looking around and seeing what the signals are telling us. I think, we're off to a bit of a lackluster start in the uranium space, although we know Cameco have got to do that buying here directly. So we'll see what happens there. We see a bit of good news out of Japan that Itochu and Marubeni have started buying product again. So, look, it could be an interesting year for uranium. But you can't. We haven't seen any great share price pickup from anyone just yet, other than little old IsoEnergy, because we're getting ready to commence drilling.
Right. Okay. You've told the drilling story. You've told you've raised some money. I get it. So that is good news. Can we just help me understand where you think you sit in this little theater that you're playing in? Okay, you've got the big boys are, we know where they stand on this, and there's lots of little juniors, so like 40 odd juniors in similar place to you. Some have managed to raise some money like you. A lot haven't yet, and I think this year are going to. If they can't, we'll struggle. And there are others just sitting biding their time. What are you, apart from your drilling, what are you doing to position yourself for success? What's going to drive that share price this year?
Well, drill results, of course, will be the primary thing. But the market, I think.
What else are you doing though? What else are you doing?
I can say that I think that the sector is still rife for consolidation,
right.
And we continue to look around for other opportunities. Of course, when we spun ISO out of NexGen, we saw ourselves, I suppose, as something of the business development arm of NexGen, and we've cast the net far and wide looking for opportunities. I must say we come home to the Athabasca basin every time, because that seems to us to be where the very best quality assets globally are in the best jurisdiction. So we've sort of narrowed our business development focus to that area. Of course, we were very active in staking ground last year, and I think people can expect a bit more of that from us where it makes sense, because it is a cheap way of putting your foot on very prospective ground. We're very excited. We acquired some ground along that Collins Bay trend midway through last year that's very, very prospective. So you can expect more of that from us. And we'll look at those other business development opportunities as well. I think, the breadth and depth of this downturn means that there are some seriously undervalued companies and properties and projects out there. And having the ability to raise finance and advance projects as we do sets us up perfectly to be at the front and centre on any of those sorts of opportunities. So we'll continue to look at those as well.
But do you think is that just wishful thinking on your part, or do you think you can genuinely go and raise money to do some consolidation? I mean, is that real?
Yeah, look, you don't want to show your whole hand, but certainly we have those chats with investors. We've got some serious sort of institutional investor backing whenever we need it for the right types of opportunities.
Okay.
But they've got to be right. They've got to be, good projects where we're only ever going to do very, very good projects and projects that make sense, that are accretive and well valued for our shareholders. And unfortunately it takes us, or every time we come back to the best bang for our buck for our shareholders, as we see it, is to prove up a high grade resource, of which we're fast moving towards on our Hurricane discovery. Not there yet, but I'd love to think that by the end of the year we'll have a resource on that project and be moving that forward.
Okay, and are you conscious? Are you aware of other junior uranium miners who are undervalued to the extent that they can't raise finance. Are you aware of any companies like that, or is that just?
Oh, look, I think I think there are a few out there. Quality is pretty hard to find. I think there are a few in Canada. I think there's a couple in Africa as well. Those guys appear to have sort of struggled a little bit to raise capital. There are a few that have done okay here recently that we've been impressed with, that have managed to raise money.
Mm-hmm.
We've managed to stand out from the pack there by raising nearly 7 million in December, which came pretty readily. So, for us, it's all together. I feel a bit sorry for some of the other guys. I think, I know we don't want to cover off on the macro front, but we've all been a little bit surprised as to how slow moving that uranium price has been. I think as a sector, we've been consistently wrong in predicting where things might head. But we'll see. 2020 could finally be our year.
Yeah, I think so. It's been interesting. I think a lot of the fund managers have got very quiet. I think a lot of people, who've been sitting on uranium equities for 2-3 years, or have been repeating the same story at the beginning of each year. But I think this year, I do feel more than I did last that the macro story is there. I think that the demand side is definitely there, and I think utilities are using up, or soon going to be operating on fumes if they're not careful. So yeah, I do think you guys will see an upside this year. Look, thanks for the update. I know you quite kindly responded to our phone call just for a quick update and see how things are going. But maybe let's kind of touch base when you've got into this drill program. You start getting some of these results out, because, like you say, I'm keen to sort of see how the market reacts to those drill results, and whether that moves the dial or not. So appreciate your time. Good to speak to you again.
Thanks, Matt. I'll be very, very keen to see how the market reacts as well. But
I bet.
All right, mate. Well, thank you very much, Matt. Always a good to talk with you, and well done on what has sort of quickly become the leader in the space in these interviews. It's fantastic. Well done.
Well, thanks very much. A lot of hard work from the guys around me. Believe me, not me.